Hello everyone, welcome back to the channel. This week we are going to also be doing a strategy video, and this will be one that I came up with on my own. It involves using the support and resistance levels of a particular pair or indice, but for this video we are going to focus specifically on Nasdaq, since this is a sort of scalping strategy for it. And for the returns, it's better when you do it with the indices, since the scalping version for indices will still yield results that are either the same or greater than when you use the same strategy on currency pairs. So the way the strategy works is you pull up your chart and you go to the 1 hour time frame, and then from there you mark off all of the levels that are either support or resistance levels. So for the period that we are going to be using, which is the 3rd of January, for trades that are to be taken on the 4th of January. So what I have marked off is this area over here, since it showed resistance towards the upside, and I've marked off this area over here since it marked off a support for the downside. And then I also have a marking off over here as the lowest point for the day, and I have a marking over here for the highest point of the day, and you can see it corresponds to the highest point of the bar to the either the opening or closing of the bar. What we do ignore when using this sort of strategy is spikes such as this, because it does throw off the sectioning off of areas. So for example, if you were to section this area off, when you include this spike over here, you need to increase this piece all the way up there, which limits your trading opportunities. So just ignore any irregular spikes. So an irregular spike would be something like this, or this one over here, or this one over here. So after you have marked off all of your areas, what you're going to do is go down to the 1 minute time frame, and now you can see all of those 1 hour markings we made on the 3rd of Jan, but we are going to be using these markings for the 4th of Jan. So we're going to scroll a bit over. So this trade would have been placed on the 3rd and would have rolled over to the next day, so we're only going to be considering trading opportunities after that trade has finished. So what we are going to start off with is a loss, but you'll see that this is one of very few losses, but we are going to start off with a loss. But the principle that was applied was correct, so it is a loss that you are going to be expecting, since your strategy won't be 100% accurate. The reason why we took this trade is we looked at the zone we marked off earlier, which is this over here, and then we saw a break of the zone and then a retest of it, and then on the retest, after we saw confirmation that the market is moving towards the upside, we placed a buy trade. So that buy trade that we have didn't end very well for us, but it did show that there was a potential move to the upside. It just didn't have enough steam to carry through. And then immediately after that, we had a lot of downwards movement, which broke through the lows over here, and that is why we got into another sell, which turned out profitable. And then we just follow that same sort of formula, where if we see the lows being broken, we can go for a trade in that direction. So the reason why there isn't a trade over here is that when the lows are broken, which would be on this bar over here, the market has already pushed into another one of our zones. So for our next trade, we have another loss, and this is due to the market pushing back to the upside, as you can see over here, but then following through afterwards. So as soon as the market pushes through for the second time, we are going to be using this area over here as the low that we would like to have broken. So on this bar over here, we break that low. So this is where we would have our sell trade, and that would be for 25, which translates to 2,500 pips, and our stop loss is at 1000, which is 10. And then we keep watching. So now we are in the fourth and last zone. When we are at the last zone, this is when I would look for market to start trending, so my trade would be bigger. So like you saw at the start, we had this big trade over here. This is the previous day's last zone, meaning that the trade was out of 8,000 with a stop loss of 2,000, and the same would apply to this area over here. So what you would do for these ones specifically is you wait for the same sort of thing where you see a retest of the zone, and then only after the lows are broken do you enter the market. And we took a sell on this one, and it ended with a profit. So that was for the 4th of January. So the strategy isn't very complicated at all. It's very simple as long as you get the correct zones. And for Nasdaq, seeing the support and resistance levels is the most challenging part of it, since you do get those spikes like I showed you before. So just for another example, we can move over to today's trades. So for the current day, we only had one zone that was in play, and towards the downside was our last area we would look for a trending market. But towards the upside, we're just looking for our 2,500 pip trades. So we took one over here as soon as this high was broken here, and then as soon as this high over here was broken, we took another trade. Unfortunately, it ended in a loss. But then here we took another trade which broke these highs over here. We applied the same concept, but then lost on this one. And then for this last trade, remember that the take profit and stop loss for the larger trades have changed, so it's 2,000 to 8,000. So what we did was we waited for the low over here to be broken, and then we entered the market. There was a bit of resistance, and then the market went in the same direction. So now we are looking at the results of the trades, and these results are for the period of the 4th of January to the 6th of January. So during that time period, we got 30 trades. There were a few 8,000 pip trades and quite a few 2,500 pip trades. In total, there were 23 wins and 7 losses, bringing our win rate for this specific strategy to 77%. And that would get you $780, and when that was converted, it came out to 12,090 Rand. So for this strategy, remember that there are two take profits and stop losses, the 2,500 with the 1,000 stop loss, and the 8,000 take profit with the 2,000 stop loss. The 8,000 take profit and 2,000 stop loss are only to be used when you're at the last zone, which will either be the first zone from the top or the last zone from the bottom. Otherwise, you're going to be using the 2,500 take profit in order to trade between the other areas. But you are more than welcome to use the 8,000 take profit if you are trading at a volatile time and you know that the market will be moving in your direction. So from the backtesting I did, this is one of my most profitable strategies that I've come up with. I do see that it still says SE Trading System version 2. This is not that. This is from an earlier video. So for this particular strategy, since the maximum stop loss is 2,000, I do recommend that only accounts that have at least 5,000 Rand in them use this sort of strategy, since it does give you a big enough buffer to make a few losses and then start making some wins to cover those losses. Whenever you are trading indices like Nasdaq, it is recommended that you have a bigger account size, I hope the video has been helpful to all of you who are watching. So from me, that is the end of the video. Thank you for watching. Goodbye.